Hello, Oracles. Well, Tesla today still continued to move up. We saw a nice little bump in the stock on Monday with a half a trading day, and today we moved up a little bit more. Not a huge move, but we got the Fed minutes that came out today, and I wanted to share with you guys, and I've been talking about it for a while. I wanted to go a little more in depth on the way I can get dividends from Tesla stock. It is not from Tesla itself, it is through the YieldMax ETF, TSLY. So I was going to dive into that. And there's other ones as well. We're going to take a look at their website, see what other stocks they have to offer in case some of you guys are looking for some other options as well. But I want to get into that, give you guys some more information on that, and then we'll discuss what we could potentially see from those in the future if they are going to be able to sustain that high yield dividend that they are paying out currently. So we'll get into all of that in just a minute. All right, so looking at the charts today, again, we climbed up a little bit, closing over 282. Not sure why this isn't updating, but either way, still climbed a little bit today. We do have that gap that we formed down at 264. And looking at the Fed minutes that came in, looks like there were a few of the Fed members who were looking at potentially raising rates in June. Now, we did hear from the Fed when Jerome Powell spoke about how the fact that they were going to be skipping the last one, that term came out. He didn't really mean skipping, but sounds like if there were some Feds who were planning on raising rates in June, there's a good chance we might actually see the rates go up here in July. On July 25th will be the next FOMC meeting. So at that point, I'm guessing they would be going up 0.25%. So that is 25 basis points. They did say that they're looking at 2 more rate hikes this year. That could be one of them. So we just have to wait until that time frame to see, but there's a lot to transpire between now and then. Next week, we have CPI on the 12th on Wednesday. Then we have PPI on Thursday, the 13th. The week after that, we're going to have Tesla earnings on the 19th. And then the week after that, on the 25th, will be the FOMC meeting. So a lot to go on between now and then, but I think we might end up seeing that rate hike. Now, with that said, we're going to dive into TSLY and looking at TSLA itself. Yes, looking at the charts here again, we're going to go into it, and we are on the daily RSI at 72. On the weekly, we just pushed above 70 into the overbought range. Now, again, we are still in extreme greed range when it comes to the fear greed index. So when you're looking at these numbers, this is just a lot of signs pointing to a pullback. Now, speaking with Gore earlier today, and the discussion was, we are most likely going to be getting a pullback. We agree upon that. The questions are, when are we going to get it? And how far back are we going to pull? So I still add every single day. When it comes to TSLY, I added today because the X date on it is on the 7th. Usually go with a T+2. So you want to make sure you buy 2 days ahead of time to make sure that everything has settled. And then you will get credit for those. So when the dividend payout comes, you will be able to get those dividend payouts for every stock that you own. So we're going to get into that shortly. However, looking at all of these things coming together, I do think we're going to get a pullback. So I'm saving some cash. I did add today, but I'm saving some cash. So I think when we get the August dividend rolling around, we may get a better buying opportunity between now and that date to be able to pick up even more for less. So being able to obviously be green and get dividends at the same time, huge benefit. One of the reasons why Warren Buffett has been able to get wealthy as much as he has is you have dividend stocks and he buys value plays. So he's most likely going to be in the green on those and get dividends on top of it. Typically, I don't buy stocks or ETFs strictly for the dividends, but when you guys start to see some of the payouts that are coming for these, yes, I am buying these mostly for the dividends. However, when it comes down to it, I also have a spreadsheet made out based upon what the value gain or loss is on all of these, plus the dividends. Because if you buy a whole lot right now, let's say, and it's $18+ and it drops down to $14 and you don't have the dividends to back it up, you're actually upside down. So you really haven't made any money on it. Sure, you can hold it longer, but are these dividends going to be paying out like this forever? So it's that balance. You guys need to do your own due diligence and research. Again, I'm going to bring up the website here. I do have it in the link in the description. You guys can check it out there for yourself. So none of this is financial advice. I'm just sharing what I am doing with you guys, and you guys can do what you want with it and take that information. All right, so here is the website. It is YieldMaxETFs.com. Again, that link is in the description. These are the ones that they currently have available. They have OARK, that is for ARK specifically. The distribution rate, 36.01%. TSLY, this is the Tesla one, 53.18%. Apple has one at 15.24%. Nvidia has one at 37.85%. And they do have an Amazon one coming as well. Now, today I did pick up 5 more shares of each one of these. I haven't owned OARK or NVDY yet, so I picked up 5 shares of each of those. I picked up 5 more TSLY and 5 more APLY. This way, when the payout date comes on the 15th, I will be getting dividends for all 4 of these. And I will pay attention to Amazon when that one comes out as well. So now, running through this, and again, I want to make sure that we give you all the proper information. Just going through this, YieldMax ETFs seek to generate monthly income by selling, writing call options on single company stock or single ETF exposures. YieldMax ETFs pursue a strategy that aims to harvest compelling yields from assets that are not typically associated with monthly income. And one of the reasons I went into this was I thought, how sustainable are these percentage levels? I mean, when we're looking at 53%, and I've already gotten paid twice from Tesla on this, significant payouts. How long can they sustain these? So I was like, let me find out right from the source. So the performance data quoted above represents past performance. Past performance does not guarantee future results. The investment return and principal value of an investment will fluctuate so that an investor's shares, when sold or redeemed, may be worth more or less than their original cost, and current performance may be lower or higher than the performance quoted above. The distribution may include a combination of ordinary dividends, capital gain, and return of investor capital, which may decrease funds' NAV and trading price over time. As a result, an investor may suffer significant losses to their investment. Additional fund risks may be found below. We will take a look at those in a moment. But again, that goes back to the spreadsheet that I told you I have created for myself, because just because you're getting dividends on a stock or an ETF does not mean you're in the green, because if that is losing value over time and you're losing more value than you're gaining in dividends, it makes no sense to have it. So you still want to be careful with this. And this is why, for me, I have the majority of my money in CDs. I'm not going to lose money in the CDs. I'm getting about 5 to 5.25% returns on interest there, but I'm going to be shifting some of that money into some of these ETFs. Now, again, I do have that gut feeling, and looking at the charts and looking at the data, thinking we're going to be getting a pullback market-wide, and Tesla, I think, is going to be over-exaggerated because it was a little over-exaggerated on the way up and could be over-exaggerated on a bit of a sell-off. So I'm not just going to dump all of my money in. I'm going to dollar cost average my way into these, but I'm going to pay attention to those specific X dates that are out there. Now, all of these pay out on the 15th. Typically, within the first 5 days of the month is going to be that X date. You go with that T+2. So if the X date for TSLY, like it is today, is 7/7, 7/5 is that T+2. You want to make sure that everything is settled, and then you're good. So I'm going to be paying attention to that. So if I get a good dip buying opportunity over the next month, I'll scoop up some of these ahead of time just to make sure I have them for when the next dividends roll around. So they go on to say the distribution rate is the annual yield an investor would receive if the most recently declared distribution, which includes option income, remains the same going forward. The distribution rate is calculated by multiplying an ETF's distribution per share by 12 and dividing the resulting amount by the ETF's most recent NAV. The distribution rate represents a single distribution from the ETF and does not represent its total return. The 30-day SEC yield represents net investment income, which excludes option income earned by such ETF over the 30-day period ended 6/30/2023, expressed as an annual percentage rate based on such ETF's share price at the end of the 30-day period. All YieldMax ETFs have a gross expense ratio of 0.99%. Selling and writing calls will limit an ETF's participation in the appreciation of the underlying security. And these distribution rates caused by unusually favorable market conditions may not be sustainable. Such conditions may not continue to exist, and there should be no expectation that this performance may be repeated in the future. So, again, it's very important to understand all of that information before you just go ahead and dive into this because, yeah, those DTF dividends sound amazing. 59% is what I got on TSLY last month. Absolutely insane. Looking at about that 52 to 53% going on for this next month. Those are awesome, but again, are they sustainable? How long is this going to go for? Most of these rates are based upon the first half of this year. And we know the first half of this year was a significant increase. We went from basically $100 to $280 over the last 6 months. Extreme climbing and extreme V bounce that we had seen. So, what's going to happen if we do get a turnaround in the stock? Again, I am anticipating that pullback. We may get a pullback and a further run up before we get a bigger pullback in the future. Nobody knows for sure, but this is why I'm paying attention to it and I'm slowly dipping some money in, but also keeping a good chunk in CDs because I don't know what's going to happen. If Tesla crashes for some reason and all of a sudden we go down and the price gets cut in half and we go down to like $9 a share, not saying that's going to happen, but if that does happen, all the dividends that I made along the way are now gone. How much will it come back? Who knows? Will they still be able to give us that yield of a dividend of 50 something percent? Don't know. Is it going to turn around and maybe that $9 is just the bottom and then it does rebound to $18? Also totally possible. So lots of different things, lots of different scenarios that can play out. But for me, I think it is worth the risk to put some of my money into it. This is why I'm still keeping it diverse and spreading it out amongst a bunch of the different options that they have. I also still have JEPI, I have JEPQ, I have QYLD, I have SVOL, and I do have those CDs as well. So I'm pretty diverse when it comes to all of the dividend ETFs that I have paying out and all of the different incomes that I have coming in. But at this point right now, based upon the money that I have invested, which is around $30,000 into all of these different ETFs and the CDs, I'm pulling in right around $200 a month. Not too bad considering it's just free money. It's my money making me money. I'm literally doing nothing to make this money. So if I can convert some more of those CDs into these ETFs, I can increase that. Now, since it all pays out on a monthly basis, you now get into some compound interest that can grow pretty significantly depending on how long this is sustainable when it comes to these high yield payouts. So again, if you guys have any questions on this, I'm still learning about it myself. But again, I wanted to put the website down below for you guys to dive into. Please give your feedback down below. Maybe there's something that I am missing. I try to look at both the risks and the rewards from it. Obviously, there are some high rewards you can get from it, but there are some risks that are involved as well, a lot of unknowns and a lot of uncertainty. So you guys give me your feedback down below and how what you feel about it. I know there's another way to do it, which Gort and I have spoken about, which is TSLL, that does pay a dividend, very small percent, just under 2% right now. But that's like Tesla on steroids. That moves us significantly more. So for me, I am almost doubled my income on that one. So I doubled my investment. I put in money to get just 10 shares of it, and I basically doubled that money. So I put in a couple of stop losses, again, anticipating this pullback, but I'll take those profits. And what I'll do with those profits is I'll put them into TSLY, and then I will wait because if TSLL pulls back, so will TSLY. I could take those profits, buy into TSLY lower, take those dividends, and then put them back into TSLL as it gets lower as well. Just working on some different options I can play here when it comes to Tesla stock itself. Considering I don't play options, it's nice to have the ability to play some options through an ETF and get some pretty decent returns off of it. You guys can let me know your thoughts in the comments below. How do you feel about it? Do you guys own any of these high yield dividends? Do you guys own TSLY? Do you own TSLL? Share your thoughts in the comments below. Let us know any successes you've had with it. And also let us know if you've had any downside to this as well, because it's good to see both the positive and the negative of things. So please share your thoughts in the comments below. Otherwise, thank you guys so much for watching. I appreciate all of your support. Have a great one.